Welcome to this episode number 85 of your next trade code today new records. So for the US viewers, I wish you a good Thanksgiving a bit later, but I wish you the best for this year. Coming back into the markets and looking at November, so this is what we have in front of our eyes. We had a spectacular November after the elections with most asset classes up. We are talking 40% for Bitcoin. We are talking 10% for the small and mid caps with the Russell 2000, S&P 500 up 4%. But as you can see, you got many sectors like financials, like energy up 9%. So very, very strong month. And we are making new records. We are talking about the Russell 2000. We are talking S&P, obviously cryptos. So new highs after new highs. And 2024 so far is an exceptional year. If you look at the S&P 500, this is the best year of this century. So let's start and jump immediately with the week-to-date asset performances. We had a shorter week, as we said. The market in the US was closed on Thursday and only half a day on Friday. But as we flagged last weekend, most of the time the Thanksgiving week is a good week. We flagged that it was roughly around 0.8 to 0.9% for the week, and guess what? Actually, we had 1.1% for the US market. One to flag and really to be looking at, which is Brazil. So Brazil has been struggling, down 3% on the week. You could be looking as well at the currency. This is, if you think about emerging market, if you think about some companies, I got the names like a Bird in the US, which got roughly 15 to 20% sales in Brazil. We have exposure that is coming down. Why? Due to fiscal reason and new government. So for the emerging, always we want to be looking at the names that could be under pressure because sometimes it's spread around other names. Currencies, bit of weakening of the US dollar. We saw some news with Trump saying over the weekend that he will be putting 100% tariffs on the BRICS. That is interesting. We're going to be seeing more and more headlines around currencies. As I've been flagging last weekend, I thought that the US dollar was due to a bit of weakening, and as well this was the end of the month. So at the end of the month, you do have like some flows coming. Ethereum very, very strong. Gold, a bit of weakness. WTI as well. Let's look at the week-to-date industry performance. Looking at the S&P, which is roughly here, and the Nasdaq here. As you can see, we have many winners or sectors, industry that have been outperforming the S&P 500. So we have a broadening of the of stocks where some flows have been moving from the FANG, from Nvidia. So Nvidia, since their earnings have been underperforming the overall market, and these flows are going into names like solar, like online retail, biotech, health. So really a broadening of the overall market. If you look at the sector's performance, energy down 2% on the week. We saw that WTI is still trading around the $68, $69, $70. But overall, most sectors outperforming. But as you see here, IT was flattish on the week. So again, a lot of flows are moving away from tech or not going into tech and broadening into the rest of the market. And that explained the outperformance of Russell 2000 and so on. So what about the rates? This one is interesting because now we are at 4.17% on the US 10 years. So we are down 23 bips on the week, on a week that was pretty quiet. But last weekend, Trump nominated Bessent, as a U.S. Treasury Secretary, which is going to have implication. We're going to be looking just after, but that was a relief for the Treasury market, thinking that actually the Trump administration would be careful with the debt and how they will be emitting debt in the near future. What about the Fed funds expectations? Now we are standing roughly at a 66% chance, roughly of the FOMC cutting rates at the December meeting. So we should expect another cut, but in this week coming, we're gonna have tons of data with the ISM manufacturing services, but more importantly, the NFP, the job market, and the Fed has been pretty adamant in saying that the number that they are mostly looking at these days is the job market. So depending where the NFP is going to be at the start of December, that will give us the tell for the cut or no cut of the December meeting. VIX volatility, it's not the perfect metric, but that is helpful to understand, how volatility has been doing. And here we are talking at implied volatility, but realized volatility is telling exactly the same story. So 14%, so we have been coming down massively since the 20% where of the start of this month, where many investors were hedging their portfolio. So 14%, quite a low level. If you look at 2017 after the election, we spent the whole year around 10% and below in 2017. So if you want to believe that we're going to have the same as 2016, 2017, you should expect inflation to be to the floor in the next 12 months. So let's go into the technical analysis as always, and starting with the S&P 500, which is following the same trend as before. So the trend is your friend, is going higher, making new highs after new highs. So not much of a change. I want to flag the Russell 2000, which has been doing very, very well since the election. We broke the 2300 levels. What is interesting is, as I flagged, we have some flows that have been going out of this NVIDIA of this world, going into Russell. And due to the size of NVIDIA and the FANG, you don't need that much of a flow to go into the Russell for the Russell to be on fire. I want to flag as well, so this is the retail. I don't want to be spending too much time into technical analysis, but Russell, not the Russell, sorry, the retail XRT, very, very strong. So we had names like Urban Outfitter doing very, very well, and that tells you that the retail is doing pretty well. So we are between the Thanksgiving and the Cyber Monday. So far, what I've been reading is the US consumer has been doing pretty okay, and here you get kind of a leading indicator of how retail has been doing, very strong. We had this move up, this gap and this confirmation, and as you can see at the bottom, some big volume or volume that is above average. I want to flag as well the euro dollar because it's making a lot of headlines. I should have been putting as well the Brazilian real because this is really a space to be looking at. But what we flagged, we touched after like a big move that was Friday last week. We managed to bounce, and finally the one that we flagged last weekend, which is the most shorted stocks, and as you can see, those stocks that suffered from 2021 onwards. So if you look at the start of 2021, we came down massively. So those are the stocks, the companies are not making money, but that were very hot in 2020 and the start of 2021, where we saw many IPOs and SPACs. So that was around that time. Since then, it's been coming down, and over the last 2 to 3 years, it was mostly doing nothing. What is interesting is over the last 2 or 3 months, we've seen a big jump in those stocks. So the most shorted stocks will be up 30% over the last month, the month of November, and outperforming the overall market by 25%. So that tells you that the short part of the books have been struggling. So some of the short sellers, which their business is to be short stocks that are, or companies that are pretty dodgy, have been really struggling. That is not due to to fundamentals that are getting much better. This is mostly about flows, and the pain is on, and retail is playing with those names. So let's go back into our Excel spreadsheet looking at the week, and we don't have much for the week. So as I said, we got a new US Secretary of Treasury, Bessent, which has been nominated by Trump. He's an ex-hedge fund guy. He used to work for Soros. And what the market is mostly looking at is the 3 arrows of Bessent. So the first arrow is by saying the US will be targeting a deficit of no more than 3% of the GDP. These days, we are around 5 to 7%, and that means you have a lot of bond supply and yields higher due to that. So first thing, less deficit, and second one will be higher growth. So growth around 3%. So that's your 3 arrows, 3, 3, 3. The second one being 3% GDP growth. This is mostly where, actually the Biden administration has been making over the last few years, 2 to 3%. So, and if you look at history of the US over the last 50 years, this is roughly what they have been doing. So not much of a super number. And the third one is a big number, actually, which is 3 million barrels more of oil production. So if you think about the US, they are roughly producing between 20 to 25 million, and the overall production of the world is 103 million something, so roughly 100 million. So if you put 3 million barrels more, that means 3% more of supply coming into the market. And what they try to achieve through this administration is by putting more oil and more energy into the market, cheap energy, meaning, you have an industry that you can relocate into the US. And so that has been the target, the 3 arrows: GDP, deficit, and more oil production. And in the meantime, the market has been saying we really like it, as we saw with the US 10 years coming down below the 4.2% at 4.17%, down 25 bips. And the overall market, so this is the chart that I like. This is a chart that we used to have when we look at the correlation between bonds and stocks. So here on the left-hand side, this is for the S&P 500 futures, and on the right-hand side, this is for the US 10 years, the futures. And as you can see, massive correlation, meaning when yields are coming down, when the US 10 years is coming down, stocks are going up. And that has been the trend over the last 2 to 3 weeks, where we've seen more or less the market trading like the future, like the 10 years futures. And if we look at the S&P 500 over the last 5 days, we keep on going up and up slowly but surely. What we had on Friday is a bit of a short session where the US market closed at 1 p.m. in New York, so a shorter version where the 0 DTE played even better. And as well, it was the end of the month, so a lot of flows going into the market. Finally, because there is a lot of US, but there is the world as well. And as a French, the market has been looking at the French budget. So France has been experiencing some issues with governments and the budget for 2025. And there have been talks to get this budget going through, but that is not that easy. And what I want to flag is a chart that was done by Barclays, and I like very much. So you do know, probably if you are following me, that I strongly believe in correlation. And here on the left-hand side, what do we have? We get the CAC 40, which is the index for the French market, versus the Stock 600, which is the equivalent of the S&P 500 in the US, much smaller, evidently. So that's on the left-hand side. That will be your Y chart. And on the right-hand side, that will be the French 10 years, which is the OAT, versus the minus the German 10 years, which is the Bund. So to make it simple, as long as the spread that the French government is paying more for its debt, we are talking these days roughly 0.8% to 0.9%. So the French will be paying these days for 10 years 0.8 to 0.9% more than the Germans. And as you can see, there is a strong correlation. where the French market will be underperforming the overall European market. So as always, look at those charts. This is very, very helpful. Now looking at the catalyst, looking at December. So as always, we start the month with tons of macro. So we get the manufacturing PMIs and ISM on Monday. On Wednesday, we get the services PMIs and ISM. For the job market, we got the ADP, the JOLTS, and the NFP. And looking at the NFP, here, most recently, we saw some volatility on NFP's days, so that will be for Friday. We do have some earnings coming, some big names that I think are important to me, like CRM, Marvel. We do have Lululemon as well on Thursday, and some other names, so Dollar General. So some names that could have some impact. Finally, we got the others. And what are the others? This is mostly about Powell talking on Wednesday. So we have still some Fed speakers that should give us a bit more color about how we should price the FOMC meeting in December. So PMI, NFP, Powell, as I said, looking at the retail to the XRT and as well through the Black Friday and Cyber Monday. This is very important to understand how the US consumer is doing since the election. What is the perception of the new Trump administration? Is it like a green light to consume even more, or is the US consumer a bit struggling? So I'm looking at any data that is coming in the next few days around the consumption. If you look at the weekly straddle, meaning by how much the S&P is expected to move for the week, we are talking plus to minus 1.1%. And finally, looking at the seasonality, because you want to be looking at flow. So November, always very strong, not always, but on average, very, very strong, 2.5%. We tick the boxes. We did twice that return, and if you look again at 2024, it looks almost like we are beating any returns by the average by 2 times. What about December? On average, this is up 1%, so not as strong as November. What we see in terms of seasonality is most of the time actually the first 2 weeks of December are a bit weakish. First 2 to 3 weeks before the expiry, and after the expiry you do have a rally. So this is it for the catalyst. Finally, as I flagged last weekend, we have until the end of this year a 25% holiday discount on the 4x4 video series until the end of the year. The coupon code is holiday2025. We are seeing more and more people joining the 4x4 video series. So finally, any questions, you can send me an email. You can join the trading community on Discord. And as I said, now we are in December, last month of the year, after so far a spectacular year. So this is it for me for this week. Have a good trading week. Bye-bye.